Something big just happened, something that a lot of retail investors don't understand the significance of, but a lot of institutions and larger, wealthier investors realize is a huge deal for Bitcoin, and it has to do specifically with BlackRock. I want to go through this. It happened in the last 5 minutes before recording this video. I also want to go through a scenario where you can actually stack more Bitcoin than you think. It's something really cool that I'm going to start doing actually, and allows you to get passive Bitcoin. And it's not a scam or anything like that. It's not some kind of I say it's passive, but it's not passive income. It's not like putting your Bitcoin somewhere. It doesn't affect your current Bitcoin. It's just a way to get automatic Bitcoin from doing something that you do already. And I have nothing to sell with it either. It's just, I didn't know about it. It's through Fidelity and it's pretty awesome. So I want to talk about that along with some FUD. MicroStrategy might have to pay federal income taxes on its unrealized Bitcoin gains of $18 billion. Okay, let's talk about all this. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. If you want to trade Bitcoin, if you want to trade crypto in general, there's a link underneath the video to WEEX. There you can sign up. There's no KYC. You don't need a VPN. You get some sign up bonuses for using my link. And you can start trading all different kinds of assets, and you can do different kinds of margin. You can do isolated, combined margin. You can do cross combined margin. They have a lot of different ways to trade. You can trade spot. You can copy trade as well. There are also some other links in case you want to check out, like BTCC or CoinW or Blofin underneath the video as well. So definitely check those out. Also, if you want to get serious about trading, like we're going to be talking about some really important stuff today. If you want to get serious about crypto, check out the link to the Patreon underneath the video. There are just literally, I think, 2 spots left in this lower tier. No, 3 spots left. There are 3 spots left, and then we're most likely going to be raising the price. So if you want to check this out, there's a link. There is a chance that we might have one more group of maybe, 25 Patreon members at the same price, but we haven't decided on that quite yet. We just need to manage the new people coming in because there are a lot of people coming in. So you can check this out underneath the video. If you join the premium tier too, you get to ask us specific questions like to make videos on, video suggestions. So definitely check this out underneath the video. Thank you so much. And let's get into it. So Bitcoin, a little bit volatile today. Bitcoin actually went up to 107, a little bit over 107. Then in the next 2 hours proceeded to go down to 105. So just straight up and to the right, straight down and to the right. So there's some volatility today. Not big moves. I think everyone's just kind of tired after this week because there's been so much that's happened. Pretty much everything we wanted to happen has now happened with Bitcoin and crypto, with the new administration coming in, except for them just saying we're going to buy Bitcoin or we're going to definitely hold Bitcoin. It's more like we need to research it. But something big that I think a lot of people forgot about, because I forgot about it too, was just announced. But let's start here. A new academic paper uses empirical data to prove that Bitcoin is the most powerful tool for states to protect themselves from monetary debasement. The dollar lost 25% of its purchasing power since 2018. This paper, led by Dr. Murray Rudd, details how just a small Bitcoin allocation can protect a state's budget from its loss in purchasing power. Pretty cool, right? This is coming out from Dennis Porter and the Satoshi Action Fund. I saw one of their representatives was talking about this in court. Very cool. Also, a little bit of FUD here today. MicroStrategy may have to pay federal income taxes on its unrealized Bitcoin gains of $18 billion. This was going up all around Twitter today. And MSTR actually fell down throughout the day pretty significantly, 5.2%. I think this is BS. I haven't read the Wall Street Journal article, but they're talking about taxing unrealized gains, which is something that is not a thing. I know there are some politicians that want to do that, but the fact is that would cause a massive amount of trouble. Think about it from an individual standpoint. I think we usually hear about this, where politicians say that wealthy investors aren't paying their fair share in taxes. They're being paid in shares of their company that are not being paid in cash, so they don't have to pay taxes on that until they sell, as I understand. So yeah, some people have said that they're going to be taxed on those unrealized gains, on those unrealized shares or those unsold shares. The problem is that would cause massive sell-offs in all these different companies. If that applied to everyone, it would be such a pain in the ass, right? Imagine if you and I had Bitcoin go up 30% in a year, 50% a year, and then we got taxed on that. So we had to go sell the Bitcoin. Like, it would make everything more complicated, make everything more complex. And when you think about it too, if billionaires start being taxed on unrealized capital gains, they probably move somewhere else, right? They'd move their company somewhere else. So there are a lot of implications to this that I think we probably shouldn't even get into the weeds on. I don't think it's a good idea. I don't think it's going to happen. It's kind of crazy. It's unprecedented right now. And the fact is, MicroStrategy is not going to have to pay taxes on this either, unless they start selling off some of this Bitcoin. Now, MicroStrategy fell down throughout the day. I think it's fine though. It's fallen actually a decent amount. If we look here, it was just $400 7 days ago. It seemed like it was just yesterday, but it's fallen down a little bit over the last few days. But yeah, I think it's still looking great. We have a massive breaking statement from Dennis Porter to a new bill enabling Ohio to create a strategic Bitcoin reserve with 6 co-sponsors has been introduced in the state of Ohio by Majority Whip Steve for Ohio House. So the state can allocate up to 10% of its general fund, budget stabilization fund, and the prizes trust fund into Bitcoin. Robust custody solutions are laid out, ensuring the state can uses self-custody or a qualified custodian. The bill is tech neutral and uses the term digital asset to reduce political friction, and a $750 billion market cap must be met to qualify for the reserve, ensuring that as of today, only Bitcoin qualifies. Okay, so more and more states trying to get their hands on some Bitcoin and producing legislation to get there. Now, this is really interesting. iShares, Bitcoin ETF files for in-kind redemptions. Okay, first of all, what BlackRock wants, BlackRock gets. So this is most likely coming here very soon. This is a really big deal. If you don't know what this means, it basically means that large investors can, or authorized participants can send in Bitcoin and get shares of BlackRock's ETF, and vice versa, right? So if you're an institution, let's say you're a hedge fund and you bought Bitcoin years ago, but you don't want to self-custody, or you want access to work with BlackRock, there's a variety of reasons you might want to do this. You can send in your shares, you can send in your Bitcoin and get shares back. Maybe you want to be able to hedge your Bitcoin without selling it. So you send in your Bitcoin, you get shares back, you can sell calls and sell puts, buy calls. I guess you could do that anyways, but you can hedge your portfolio a lot better. You can take loans as well. Let's say you're a really large individual investor, very wealthy, but you don't want to have to sell your Bitcoin over time. You just want to take loans on it. Maybe BlackRock allows that, or your institution allows it if it's in a ticker, right? If it's in an ETF. This just unlocks a lot more liquidity without selling, in my mind. It's much better for tax purposes too. Let's say you're up 1,000% on Bitcoin and you want these shares of the ETF. You don't want to have to pay those taxes, but now you'll be able to send this in. Now, as I understand, this is not for retail investors. Maybe if you're a wealthy retail investor, you could get some institution to help you with this, but I don't think that's going to be very easy. But as time goes on, there are probably going to be more solutions for this. I mean, I can imagine years from now, maybe banks helping you with this kind of thing, retail banks, but it'll be interesting. This is pretty important. I know a lot of large institutional investors that have said that this will be a big moment as well. This will allow a lot more people to want to get into these ETFs. And part of it too is the other way, right? I talk about sending Bitcoin in, but some people might want to buy this ETF. But if they hear rumblings about BlackRock or Fidelity or like one of these ETF issuers having problems, they want to withdraw their Bitcoin, right? Like they would rather not deal with it. But worst case scenario, they want to get their Bitcoin out. They can do that. So this is really fascinating. Let me know what you think about this down below in the comment section. And look at this. This is something really cool. I didn't know this until recently. Fidelity is not a partner of the channel or anything like that, but I'm going to be using this. You can get unlimited 2% cash back deposited into a Fidelity account. Now, I didn't even realize that this was a thing that you could get, but the cool thing about this is you can have this put right into your brokerage account, or I think even retirement accounts, which means you can go buy the Bitcoin ETFs or MicroStrategy or something pretty passively and get cash back to do it. Instead of, I guess you could get cash back through like Chase or something like that, maybe 1.5%, and withdraw it to your bank account, then withdraw it over to your Fidelity account or your brokerage account. But I thought this was really cool. I'm actually going to be doing this to help my son out. I'm going to be buying some Bitcoin with what we spend, right? So let's say you spend this is kind of a cool scenario. Let's say you have the average income in the US and you spend 80% of it. I realize that most people that make $70,000 probably can't save 20%, but in this scenario, we're going to say you're a good saver. You're a good investor. So you have $14,000 to invest. Bitcoin's price, let's say in 2025, it averages 135. And we go to the Bitcoin bullish scenario, the Michael Saylor $13 million in 20 years scenario. It goes up by 35% for the next handful of years, then 25%, then 20%. And then, we get to 13 million 20 years from now. Okay. You can buy, let's say you can buy half of what you can invest each year. Like, okay, you have $14,000 to invest in different assets. You put some into, I don't know, the S&P 500, then some into Bitcoin. So you go half and half. So you have $7,000 a year. You get slight increases in your income each year, 4%, 4%, 4%. You also have this credit card that allows you to buy. And we'll say that you put half of your expenses throughout the year on this credit card. So you basically get 1% back on everything, or 2% back on half your expenses. Then you go out and buy Bitcoin with this $7,560. So the first year, you're actually able to get 0.06 Bitcoin. As time goes on, though, you get less and less because Bitcoin's price gets higher and higher. By the end of this 20 years, you can actually stack up a good amount of Bitcoin. By the end, you would have invested and used about $240,000 worth of capital to buy this Bitcoin, including the credit card rewards. You would have been able to get about 0.27 Bitcoin. This 0.27 Bitcoin would be worth $3.5 million in this scenario. Obviously a bit arbitrary because we're making up the final price for Bitcoin, but this is the bullish scenario. And honestly, I think this is a really good scenario for most people. I mean, $3.5 million is not going to be the same thing in 20 years that it is now. But let's say even that there's I don't know, let's say there's a 3% inflation rate, which real assets go up in value faster than that. But let's say, just for the sake of argument, it goes up 3% a year. That means that this would be worth about $2 million. Even if you say, no, the real inflation rate's like 8%. Well, this is $755,000. So still a lot of Bitcoin. This is worth a lot of Bitcoin, and 0.27 Bitcoin is more than all millionaires will be able to buy. Even if you distributed Bitcoin evenly between all the millionaires, they wouldn't be able to buy 0.27 Bitcoin. With nations coming in too to buy Bitcoin, with sovereign wealth funds, like there's not going to be a lot of Bitcoin to go around. And if you're able to get 0.27 Bitcoin, you're probably going to be looking pretty good in 20 years. So I thought this was really cool. And I bring up the credit card just because if you're someone that already has a nice Bitcoin stack, but you get credit card points like me and you just don't use them. Like I get credit card points and I don't get around to using them. We go on vacation. I could use them for that, but they don't go to the place that I want. So then I just kind of forget about them. I don't want to spend the time. So now I just have a bunch of points I don't use. You could do something like this and maybe like give it to your kid or give it to yourself, right? Put it in Bitcoin for yourself. And even without like investing anything, even just using these credit card points over time, you could get 0.02 Bitcoin in this scenario. That's with Bitcoin's price going up pretty exponentially over the next 20 years, which makes it harder to get more Bitcoin, but pretty cool. And then obviously if you spent, I don't know, $100,000, $200,000 a year, you would be able to stack a lot more Bitcoin. So I'm going to be doing this actually for my son. I'm going to be putting it into Bitcoin oriented stocks and tickers, ETFs. So he'll be able to passively stack Bitcoin over time. I'll explain the purpose of Bitcoin and why Bitcoin's such a beautiful asset to hold. But yeah, I think this is a pretty awesome way to get him started without me really having to invest anything for him, instead of just letting the points burn a hole in some account somewhere. Let me know your thoughts though underneath the video. We also had some news about Solana today. The SEC had, I think, until the end of the day for a Solana ETF approval. That might still be coming up. It's due today. I've not heard anything about it. There is a high chance that there's going to be ETF approved in 2025, according to Polymarket. There's an 89% chance. Eric Balkunis just said that there are more ETFs as well. Let's show this here. This is just now, like since I started recording this video. CoinShares filed for a spot Litecoin ETF. Friday filings in effect. And an XRP ETF as well. Yeah, so big things are coming. Lots of excitement for the year ahead. I think this is going to be a great year. Let me know your thoughts on this underneath the video. I really do appreciate it. Again, if you want to check out the links to some of the different trading accounts, you can check it out underneath the video, right? So you can check out WEEX, you can check out Blofin, you can check out BTCC and CoinW as well. Thank you so much. I really do appreciate it. We'll see you all in the next one. Bye.